Tonight, I want to take a closer look at a volatile small cap stock that got slammed today. It was down nearly 8% off a very negative article posted on Seeking Alpha. I'm talking about TrueCar, symbol TRUE, an online platform that makes it easier for users to buy a car, in part by showing you what other people in the region have paid for the same vehicle. The idea is to create a negotiation-free car buying experience where pricing is transparent. We all want that. And TrueCar has partnered up with roughly 10,000 dealerships across the country to make this concept a reality that a lot of people love, including my friend Brian Eichenberg, who writes with me at TheStreet.com. Now, TrueCar has been a real wild trader since it came public at $9 per share in May of last year. Initially ran up to $24 last September. Since then, it's pulling back to 17 and change as of today. While the company has a lot of revenue growth, many people were disappointed when TrueCar reported its most recent quarter a week and a half ago, in large part because the company saw sequential declines versus the previous quarter in its revenues, unique visitors, number of cars sold via its websites and mobile apps. And there's a lockup expiration to consider. Some 33.4 million shares owned by insiders will no longer be locked up next week. It's a pretty huge number. And TrueCar only has 45 million share float right now, meaning the shares that are currently trading. Even if you like the story, maybe you want to wait to see what happens with the expiry. So was this last quarter merely a blip? Was it actually a good quarter? Because the stock did bounce back, or is there more punishment to come? I have to say I'm concerned. I've got to figure this out myself. But on Mad Money, we always want to hear both sides of the story. Let's take a closer look with Scott Painter. He's co-founder, chairman, CEO of TrueCar. Learn more about his company and where it's headed. Mr. Painter, welcome to Mad Money. Good to see you, sir.
Good to see you. Thanks for having me.
You got that Seeking Alpha story today. You know, it's funny because we don't read Seeking Alpha before we book you or anything like that. But it's talking about how there was a sequential decline, and you've got charts which show that they are. And I want to give you the floor because perhaps that doesn't indicate how well the company's really doing.
Well, I think we're an interesting company in that we are a hyper-growth consumer tech stock, but yet at the same time, we're a very low-funnel transactional platform that works in the automotive industry. Okay. So traditionally, a tech stock is about sort of sequential quarter-over-quarter growth versus an automotive company is about year-over-year quarterly results. Okay.
Now, but fourth quarter was pretty good for autos in the country. I listened to Phil LeBeau today. He's our excellent. I'm maybe listening to him at car. He was saying that today, that the last month not so good. Does that kind of impact a different kind of seasonality for you?
So we certainly look at seasonality in autos. So Q4 over Q3 was down about 5% for the auto industry. We were down in terms of overall units, but we were up in terms of monetization. So our dip in Q4 was only about 2% in terms of actual monetization in units.
Well, as someone who started a .com back in the mid-'90s, I always wanted my unique visitors to continue to rise. I know that some people on the conference call question that unique visitors seem to have stalled. Is that something that we should be concerned about with TrueCar?
Well, first of all, TrueCar as a company grew 53% year over year. Okay. In our TrueCar branded channel, which is where we go direct to the consumer, it's 125% growth. So I wouldn't say that we're declining in any way. We're also not focused on the unique visitor count. When we wake up in the morning, we think about unit volume and monetization, and those are really the ways to think about TrueCar. We're transactional. We get paid when somebody buys a car. Right. So for us, it's not about impression-based monetization or about lead generation. It's really about focusing on selling cars and helping people to have a better experience.
Okay, so tell me the value proposition for both the auto dealer and for someone who's got the new handheld app, which I know is selling very well, and is trying to choose among car stores.
So on the app side, we've got nearly 2 million downloads. We've got over 400% growth in terms of mobile app downloads in the business, so really growing very rapidly. We're very much a proxy for the millennial buyer. I think that if you look at overall, the benefit of using TrueCar to the consumer is about price confidence. At the end of the day, we're publishing what everyone else paid for the first time ever. Nobody's ever had this data. Right. So the ability to understand what is a fair price really relies on knowing what everybody else paid. And we publish that right up front. The second thing we offer the consumer is price discovery. We've got a network today of over 1 out of every 3 dealers in the United States, about 10,000 dealers participating on the program. They believe that transparency is a better way to build trust with a modern consumer. And as a result, they put upfront negotiation-free prices on the website, and that allows the consumer to be empowered, to be in charge, to be more confident and more satisfiable.
But why would a dealer want that consumer to be so, let's say, liberated?
Look, we learned this firsthand. Okay. You know, TrueCar's history, we're also a 10-year-old company. Right. Last week, we turned 10 years old. We were boycotted in 2012, and it was because of the emotional reaction. If we were both dealers and we were thinking everyone's going to find out what everybody else paid, the intuition is it's going to be worse off for us. At the end of the day, a lack of trust equals friction. In the car business, friction is measurable. The cost of selling a car for a car dealer is very real. It's about $3,000 on the hood of every car. They split it between marketing, commissions, overhead, and the carry cost on the cars waiting to be sold. TrueCar is about attacking the cost structure and eliminating that friction by introducing trust and objective data so that the car dealer can actually sell the car for less money at retail and make more margin.
Okay,
that's the magic trick.
Fair enough. One last question. We know there is this expiration. That's not really up to you. That the lockup, you can't determine who's going to sell or not. But indeed, there is one, right? That's fair to say to people who are thinking about buying the stock after.
Look, capital markets reward performance and they reward potential. Those are long-term issues. That's what we focus on every day at TrueCar. The external factor of what's happening as we transition our shareholder base, that's very real. Right?
Okay, fair enough. I think this is a very interesting story, and people may be using the millennials are using, and I know I'm certainly not a millennial, but this sounds like a very interesting device that does bring transparency to the process. That's Scott Pater, Chairman and CEO of TrueCar. Do the work on it. Lots of presentations, tons of materials, and make a decision. Stay with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.